And Surana, former CMD at HPCL, joining in on the show right now. There's been a lot of movement in crude, so let's try and understand how this is bound to impact the industry. Mr. Surana, so good having you on the show. You know, several moving parts when we're talking about oil prices right now, from demand fears led by tariffs, geopolitical tensions to US-China trade deal. And now, of course, US Iran nuclear deal talks as well. Tell me, where is it that you think directionally prices are headed?
So, as you rightly had said, that there are too many moving parts, and the moving parts are changing every day as well. But predominantly, there are two things which are happening. One thing is, of course, the tariff war, and where some relief because of 90 days rollback between China and US. But the second moving part is the faster rollback of the voluntary supply cuts which the OPEC nations have taken. And it is much more than what was announced earlier of 140,000 barrels per day. So, two consecutive months, they have uh, announced at least to roll back 400,000 barrels. So that means what was supposed to be in October is coming in June itself. These two parts are guiding the crude prices downwards. In coming future, of course, some of the tariff things will get settled. Of course, there are also some of the conflict zones which are also tending or giving signs of some resolutions. But the demand scenario has not substantially improved from that time. And to that extent, I would assume that the crude prices should remain in the range of 60 to 70. And I won't be surprised it also remains between 60 to 65.
Uh, there is one very, I won't say strange, but out of box attempt what OPEC is doing. Oil is down and they are actually increasing production. So when demand is less, why would you flood the market with more oil?
So, Nikunj, if you go to the history, there was one philosophy from Saudi Aramco that the price anywhere near $100 should be held. And at that time, they tried to cut the production to voluntary cuts. Then OPEC Plus was made. Russia came along with them. But that philosophy didn't work for a long time. And if in today's environment, if you are to hold the prices high, it means there will be more production cuts required. And maybe they will not be able to increase the supply even in 2025 calendar year or even 2026 calendar year itself. So one of the issue is that to maintain the high price is not really feasible at that time. That's one. The second thing is for the countries like Saudi Arabia, let's say they can still maintain or hold the prices and still manage the budget. But what about the other OPEC countries? That's the second thing. The third thing is within the OPEC bloc, there were some nations who have been constantly producing more, like Iran, Kazakhstan, Russia, and at the cost of other nations who had been very sincerely following the cuts. So there is some sort of tension within the OPEC bloc itself. So now by increasing the production, at least the three nations who are producing more, they can still continue to produce more. Of course, on the face of it, there are supposed to be compensatory cuts. And the other five nations who had been not been able to produce, they can produce. That's one part of it. The second part of it is in the light of all the background discussion with the Trump focus on drill more and focus on increasing the US production, or Iran barrels coming in the market if something works out on that. So OPEC nations are trying to occupy their share of the market. And therefore, the earlier philosophy of cutting the production and maintaining the price high, I think there is a realization that by keeping the price at a certain level, if the volume can be increased or if the market share can be obtained, that may be more prudent for the OPEC bloc. And that is what is exactly happening. Along with, probably there is a realization that there is the earlier these assets are monetized, the better it is, in lieu of all the energy transitions, etc., which is being talked about.
where does this entire Russian oil effect kick in now? Because Russian oil, if there is a truce deal, the sanctions have to be removed. That means Russia can sell how much they want, to whom they want, and the price at which they want. And Russia has 12-13% of the total production, total market share. If my numbers could be up by 1 or 2%, but it's 12-13%. What happens when that oil also comes in? Then will oil go to 55?
Overall, this oil is selling somewhere, whether it may be going to China or it may be going to other countries. Some part is coming, definitely not fully. So if there are no sanctions, all oil will come out. If there is no sanction on Iran or no sanction on Venezuela or no sanction on Russia, definitely those barrels will come out in the market. And there will be change in the flow lines, definitely. So the crude, let's say, from the Middle East going all the way up to Europe, or the Russian crude coming to India or something like that. So there may be some realignment of the flow lines. But the larger context is the overall the demand, let's say, which is now projected to be around 104 million barrels per day. And if you see in 2019 or so, it was around 100 million barrels per day. So the growth is not to the extent which is there. And there are definitely some additional barrels also has come. Like in Kazakhstan, one of the reasons why they are producing more is because they have recently started production, increased the production from one of the field, and that is an international consortium, which probably Kazakh government has been maintaining that they cannot restrict them to produce less. Or some other thing, let's say in Guyana or Libya, some additional barrels come in. So we need to watch out from the demand side also to see that how this total thing comes.
Right.
But there is capacity, there is additional capacity. Of course, there are some SPRs like US SPR, which is not fully filled up. I think it is filled up only to 55%. Some of the SPRs may also consume some of the volumes.
Okay, Mr. Surana, so good to have you today on the show. And I know we could go on talking, but timing compulsions. Thank you so much for your time.
Thank you. Thank you so much.
If you like this video, then like, share and subscribe to ET Now.